In today's video, I want to do a step-by-step tutorial for you on how to use Bybit. Bybit is one of the most popular exchanges for trading derivatives of different cryptocurrencies, so trading Bitcoin or Ethereum derivatives. But Bybit is actually much more than that these days. It used to be a very derivatives-focused exchange. However, now Bybit also has a very vibrant spot market where you can pick up some really exotic altcoins way before they get listed anywhere else. You can also use their earn features to earn good yield on like your stable coins and stuff like that. They also have an NFT marketplace and even let you buy crypto directly. So I'll be showing you how to do all of that in today's video. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if you do appreciate that kind of content, then a quick tap on the thumbs up button to let me and the YouTube algorithm know that you do like this kind of stuff will be much appreciated. Now, let's go ahead and get into this. So, obviously, in order to trade on Bybit, you will need to have an account. So I'll need to trust that you can come over here, get started off by setting up your username, your password, obviously enabling two-factor authentication, which is a very important security step that you must do using a Google Authenticator app. Also, if you are based in the USA, you may need to use a VPN to be able to access Bybit, so just be aware of that as well. And if you sign up using the link down below in the description, you'll be helping to support the channel, of course, and you will also get yourself a 30% trading fee discount, and you'll be eligible for great rewards bonuses. For example, right now they're doing an awesome deposit bonus where you can get up to $3,000 USDT in deposit bonuses. They also have an incredible Bitcoin deposit bonus going on right now as well. They're running kind of deals like this all of the time. So there's lots of great opportunities to get lots of extra trading bonuses over here on Bybit. Again, use the link down below to go ahead and start your account. Thank you very much if you do use that link. So in order to be able to trade derivatives, pick up hot altcoins on the spot market, buy NFTs, any of that stuff over on Bybit, you're going to have to fund your account. There are two ways to do that. One is by buying crypto directly on the platform. The other is by sending in crypto from another exchange like BINANCE or Coinbase or wherever else you might have picked up some crypto at. Let's start off by buying crypto directly here on Bybit. So come up and click on Buy Crypto and then click on Express. So that will give you a lot of different options. Look, mine is set to NZD, NZ dollars, because I live in New Zealand. However, if you'd like to use US dollars, if you would like to use British pounds, lots of other options here right on down the list of currencies that you can be using. So most currencies are supported here, and you can buy either Bitcoin, Ethereum, or USDT. Let's go ahead and buy some Bitcoin to get started off with here. So we're going to be using the Simplex service. There's a lot of different options here. Of course, we'll just go ahead and use Simplex, and we'll buy $100 worth of Bitcoin to get started off here. So I've read the terms and agreements. Go ahead and click on Continue. Being redirected over to the Simplex checkout here. So go ahead and click on Credit Debit Card. Obviously, you can send a global bank transfer as well, but it's going to take much longer because you have to wait for the bank transfer to actually go through. But you will see you will actually get a little bit more crypto as the fees of using a card are a little bit higher. So if you're willing to wait a bit longer, you will get more bang for your buck by sending through a bank transfer. I would say if you're doing a really big deposit, you might consider sending a bank transfer and not using a credit card or debit card. But if you're only doing a couple $100, you might as well just go ahead and use the crypto or credit card or debit card to do that. So that's what we're going to be using today because we're only buying $100 worth of Bitcoin in this example. Great. So just enter your card details here, and then we'll get to the next step. So that whole process took about 2 minutes of entering credit card information, address, verifying, all that fun stuff. Now my order has been submitted successfully and the Bitcoin will be deposited into my account shortly. Now the other way to get Bitcoin or Ethereum or USDT into your account is actually by going over here and clicking on Assets and going to Spot Account. So let's go ahead and click on USDT. We'll just deposit some dollars here just as an example. So click on deposit, and you actually see you have lots of different chains supported here. So you can actually use Arbitrum, which is layer 2 Ethereum. You can use the Binance Smart Chain. You can use Ethereum. You can use the Omni network, which is the old school way to transfer Tether around. You can use the Tron network, or you can use the Solana network, which is actually what we're going to use today. So we'll be doing a Solana blockchain-based deposit for USDT stablecoins. So I've clicked on Sol here. They've given me my Solana address, which I'm going to copy now, and I'm going to take this deposit address from Bybit over to Binance. So over here on Binance, I'll go ahead and paste my deposit address from Bybit into the withdraw section from Binance. So that is my Bybit deposit address right here. I'm using the Solana network, and we're going to just send $100 over, again, as an example here, $1 fee to do that. So go ahead and click on withdraw, confirm that, and then of course, confirm in the email as well that we're going to get that across there. So, and that's it. My withdrawal request has been made over here on Binance, and soon my Bybit account will be funded with $100 worth of USDT using the Solana network, because of course we can keep fees down a lot doing that using the Ethereum network and incur some pretty gosh darn big fees, which is why using other options like layer 2 Arbitrum or using the Solana network is a preferable way to move money between exchanges in particular, or obviously from the blockchain into your Bybit account as well. Now back over here on Bybit, there is one other thing I wanted to show you in your assets tab here, and that is, let's go back to the spot account. And this is how to fund your derivatives account and your BiFi, your Bybit finance account, which allows you to, earn on your stable coins and stuff like this. So you can see right now we've got money sitting here in our spot account, USDT and Ethereum. We can go over to our derivatives account. We got some Bitcoin and USDT there. Go over to our BiFi account, and you can see, all the different options that you have available for you here, as well as your current balances. We'll get back to that in a little bit, but our spot account. So let's go ahead and transfer some funds over. So you can see right here the transfer option, and it lets you move it either into your derivatives account or into your BiFi account, or of course, from your derivatives account back to your spot account, etc. So right now we're going to move from our spot account to our derivatives account. We're going to put $1,000 over onto our derivatives account, which allow us to trade different derivatives contracts for altcoins and stuff like that versus USDT. So go ahead and click on confirm there, and that'll just go across into my derivatives account. You can see now I've got $2,000 sitting on my derivatives account that I can use for trading contracts with. So there are two ways to trade here on Bybit. One is spot markets and the other is derivatives markets. So the spot markets are basically trading without borrowing any money from the bank, so to speak. So there's no risks of getting liquidated or any of that stuff. I'm going to explain what all that is here momentarily, but this is the safer trading option. So if you are a new trader, you want to be trading on the spot markets. Derivatives markets, those are for more advanced traders, without a doubt. So just keep that in mind. You have to be able to trade profitably on spot markets first before you get into trading derivatives, as it's a more advanced trading game. So you can trade spot markets here, and we're going to be coming back to this in just a minute. We're going to be starting off this tutorial by talking about trading derivatives, which is what Bybit is known for. It's how it grew in popularity and fame. We've had a lot of other things come in over time, like spot markets with hot exotic altcoins, NFT markets, their earn features and all of this stuff, but they rose to prominence based on their very vibrant and popular derivatives markets. So you'll see there are a few different options here for you. You have USDT perpetual contracts. So this is basically trading on the price of any asset in USDT using US dollars as your baseline currency. So you'll be trading on the price of Bitcoin, but using dollars to do that. Trading on the price of Ethereum, but using dollars to do that. And I'll show you how to do this here momentarily, but we're going to be starting off this tutorial with inverse perpetual contracts, which is where you trade using the coin as collateral itself in the contract. So you'll be trading Bitcoin based on the price that it's moving in US dollars, but using Bitcoin instead of dollars as the mechanism to trade this. Similar with Ethereum, you'll be trading on the price of Ethereum in US dollars, going up and down, but you're trading that using Ethereum. So let's go ahead and click on BTC USD, which is the most popular trading option here on Bybit, and just explore how this works. Okay, now I'm gonna get myself off the screen here so you can see all the little details here on the trading page. There's lots of details we have to make sure that you can see very clearly. Now, at first glance, this page is going to look a lot like any old exchange. We've got our charts over here. We've got all of our charting tools that we can be using. We have our order book. Things start to get a little bit different over here. So we have buy long, sell short, lots of different options here within that. This is margin trading. So essentially, what you will be doing here, you are borrowing money in order to increase your potential profit, which also increases your potential loss. With derivatives trading, you can actually lose all of your money. Unlike with spot markets where you're not going to get liquidated, with margin trading, you have the potential to get liquidated. So essentially, the market moves against your trade, and in order to pay back the money that you borrowed, they sell your entire position. And you lose a bunch of money. That is what can happen in margin trading when you're trading these derivatives contracts. The flip side is that you hope that the market goes in your direction and you amplify your gains. That is the important thing to keep in mind here. So you can borrow a huge amount of money to increase your trading power here using Bybit. So up here, you see it says isolated 50x. So right now it's set to 50x margin, which is more than you're going to want to be using. That's way more leverage than you want to have on a potential trade. But that would, if for example, I had 1 Bitcoin and I used 50x leverage, that would mean that I am trading with the equivalent power of 50 Bitcoin. So as every 2% that the price goes up, I'm essentially doubling my money. So that's what starts happening here. There's also, by the way, we're gonna come back to this just momentarily, but there's also a profit and loss calculator up here in the top right-hand corner. So before you actually, click on buy or sell and actually start using your real money, you can come here and calculate what that position is going to look like, the potential profit, the potential loss, all that kind of stuff. So it's a really, really useful tool to use before actually getting into a position with real money. Now back over here real quick. So we have isolated and we have cross. Now cross basically means that your entire available balance of the corresponding margin account will be deployed to meet maintenance margin requirements, prevent liquidation. That means that your entire trading account is put on the line with this trade. Can be useful in some situations. It also increases your risk of blowing out your entire trading account. Isolated margin, especially if you're newer to derivatives trading, definitely the safer option here because you will never lose more than you put into that trade. So let's say you put 0.1 Bitcoin in that trade. That's the maximum amount that you can lose if you get liquidated. However, if you're using cross margin and you have 1 Bitcoin in your derivatives trading account, but you're only trading with 0.1 Bitcoin on that particular trade, you could lose the entire Bitcoin if the market crashes overnight while you're sleeping and you don't have a stop loss set up, which of course you should have a stop loss set up. But just be aware of that. Now you can adjust your leverage here using this convenient slider right here. You can even get fractional percentages. You can do 1.5% leverage, which is very, very safe when it comes to leverage trading. Generally, you don't really want to go probably anything over 5x, maybe 10x for some trades. You really need to start watching your position sizing though when you get into these bigger trades with in terms of leverage levels. So if you're going to use a 10x leverage or a 25x leverage, yes, these tools are here for you to use. Anything above 10x is dangerous. So in this situation, you want to keep your position sizing very low. So again, let's say we have one Bitcoin sitting in our trading account. If you're doing a 25 or 50x trade, you probably don't want to be using any more than 0.01 or 0.02 Bitcoin on a trade with like a 25x leverage because your risk of loss becomes very, very high. Whereas if you're using 5x leverage, it's much, much safer because the less leverage you use, the further away your liquidation price is. The more leverage you use, the closer your liquidation price is. If you're using 100x leverage and the market goes down by 1%, you lose your money, you're liquidated, it's over. If you're using 50x leverage, the market goes down by 2%, you lose your money, you're liquidated, it's over, etc., etc. The lower leverage is safer. Using leverage at these lower levels, 2x, 3x, maybe 5x, is a way to help amplify the gains, catching that trend, and to help make more by trading. But if you take on too much risk, you just end up losing trading. So we're going to put it on 5x here. Go ahead and click on confirm. A new leverage has been applied. So you can see we're doing an isolated margin on 5x leverage. Now, real quick before I show you exactly how to put an order in here, we just have to talk about the funding rate and the mark price. So the mark price is derived by an index price and the funding rate and reflects the fair market price for Bitcoin or any other asset that you're trading at. The liquidations are triggered by the mark price. You can see right now the mark price is 43,421, whereas right now we see the actual price trading in the order book being just a little bit different. So if your position gets liquidated, it gets liquidated depending on what the mark price is. So this is a very, very important number to keep an eye on here. We also have to talk about the funding rate. So there's the funding fee that is basically the borrowing rate. So remember, when you are trading on leverage, you're borrowing money from the bank, essentially, in order to be trading here. So you're amplifying your trading power by borrowing money to trade with. That funding fee is paid by either you or other traders. So essentially, here's how it works. When the funding rate is positive, you can see it's currently negative, minus 0.0066%, at least that's predicted funding rate. So when it is in the positive, if you are in a long position, you're paying the short holders. So you have to pay in order to keep that position open. Every day, you need to have a little bit of Bitcoin or USDT in order to pay the funding fee for that position, which makes holding a position for like 6 months or a year on Bybit a potentially very costly proposition. And vice versa, when the funding rate is negative, like it currently is, that means that people who are holding a short position, betting against the market, are actually paying the people who are in long positions, thinking that the market is going to go back up and are more bullish on the market at the moment. So just so you understand the funding rate and that you will be paying money, potentially, depending on what position you're in, or you might actually be earning money, depending on what position you are in, whether you are short or long, and what the current funding rate status is, whether it's in the positive or the negative. So there are 3 types of orders that you can do here on Bybit. You can make a limit order, a market order, or a conditional order. A conditional order is an order that stays off of the order books until certain conditions are met. When you hit your trigger price, then the order will go through, whether that's a market or a limit order. So this is kind of more intelligent order making, if you will. We have market orders, which are basically just buying at the best price right now on the market. Now, if you're trading any kind of size, This is not going to be an option that works really well for you because you're going to get hit with slippage potentially pretty hard. Like if you're trading 10 or 20 Bitcoin at a time, not really the option you want to be taking. If you're trading like $100, you're fine. You can use a market order here. Or what probably the most popular option is the limit order. This is where you set a specific price that you want to buy at and how much you want to buy at that price. So for example, we could put in here that we'd like to buy some Bitcoin at $43,300 and we want to buy $100 worth of Bitcoin at that price. You can see right now the market is not there, so I will have to wait for that order to be filled, but that is my intention, that when the price comes down to that point, I am going to buy a long position, betting that the market is going to go up. That is longing. You want the prices to go up. Shorting, you want the prices to go down. So we'll go ahead and click on buy long here. So this is isolated 5x margin, a limit order at $43,300. I'm buying $100 in USD value, denominated in Bitcoin. You can see it's going to cost 0.0004 BTC. Now, if I click this here, I can set my take profit and stop loss as well, which is very, very valuable. So let's say I just want to play this back up to the previous peak here from a few hours ago. So I want to get, $45,000 and I'm going to close this position out. So I can put in $45,000 manually, or of course I can just put in, a particular number, 25%, 50%, 75%, etc. Let's just go ahead and put in 45,000 just as the example here. And our stop loss. So this is, if I don't want to get liquidated on my position, I put a stop loss in. So this means that if the market moves against my trade, I will sell when it reaches a certain price. Normally, you want to put this below, local support, for example, because if that support gets blown out, that means your trade's probably invalidated. And this gets in, of course, to the technical analysis stuff. If you're a trader, you know about this. If you're not a trader, what are you doing here listening to me talking about derivatives trading? You got to be a trader to be doing this stuff. But let's just say, as an example, right now, support's $42,500. So let's just put it in at $42,000. So that means if the price goes down to $42,000, I think, hey, you know what? If we lose that support, the market's turning, I want to get out. You'll see here that the loss will be around 15.4% should that happen. Whereas if I get back up to $45,000, I'll have an 18% profit. Go ahead and click on buy long there. The order has been submitted successfully, although not filled yet because the price has not come down to $43,300 yet. We could also have a look at a market order here, just to get an order up here and see what it looks like. We can do it with 25% take profit, 15% stop loss area, and go ahead and click on buy long there. Now we have our order up here. You can see all the details, isolated 5x, $100 quantity, each contract valued at $1. We have the value here of that position. We have the entry price that I got in at, the mark price as well. We have the liquidation price. So if the price of Bitcoin gets down to $36,391.50, I will lose the entire trading position here. It'll all be gone. It will all be gone. However, I do have a stop loss in place at $42,221 that will stop me from getting liquidated. Of course, my take profit already set in there as well. So basically now this trade is all automated. I just sit back and let it run, which is a pretty nice feeling for a trade. If the market moves against me while I sleep, well, hey, you know what? It's fine. My stop loss gets hit. I get out of position. I preserve my capital, only taking a small hit. If the market goes up overnight, I have identified my nearest area of price resistance and I take profits there. So it's a pretty nice way to do it. So we have our daily realized profit and loss and our unrealized profit and loss. So you'll actually see this ticking up over time with, if your position's in profit, and also your funding rate will start to come in here. So if you have this position open for, let's say, a week or two, you're actually going to start seeing, like, hey, why am I losing money on this trade even though, it's in profits, well, that could be because of the funding rate. Because remember, in certain conditions, you're actually paying to keep your position open. Now you can also set a trailing stop loss here too, which is another useful tool. So if you click on add a trailing stop loss, we can set up this very, very useful tool for you. So there's two options that you can use here. We have either price retracement or an activation price. So you can set a specific price or a price retracement. Let's use the price retracement option. So we're gonna set that at $200, and I'll explain to you exactly what this means. So let's just zoom in on our chart a little bit here, clean it up just so we have a nice, good, solid view of what's going on here. Get our drawing tool out. So let's say the price of Bitcoin does this. We go up, comes down a little bit, goes up, comes down a little bit, goes up, and then it comes right back down. Now in this situation, we got up to $45,000. So when it comes back down to $44,800, which is just here, our trailing stop loss will get triggered. So essentially, maybe our trade doesn't go as far as we want it to go. Maybe we don't get the whole way to the top, so I'm sleeping. We don't actually get up here, but we can follow the trade up essentially. So as we see, just moving up, and none of these little dips are over the $200 trailing stop loss limit. But once we get up here, we actually see the market retrace by more than $200. We sell our position in profits. This helps you lock in profits on your trade, which is a very, very nice tool to be using. Now, if you want to close a position out, you can do that at any time by clicking on either limit or market. Limit, of course, will let you close a position out at a very specific dollar value. Or if you're just looking at your position and you're like, man, I just got to get out of this right now, regardless of what the situation is, you can just click on market as well, and that will instantly close your position at the best rate on the market at the time, which we'll go ahead and do now by clicking on market 100% and confirm. And that position has been closed out. Now I want to show you how to sell short. So essentially to bet against the market. You think the price is bad, it's gonna get worse, we're going down. You can profit in that market as well. It's a slightly more advanced skill. And look, there is a lot less profitability shorting the market compared to longing the market. Longing market, you have infinite upside. Shorting the market has a limited downside, limited upside in terms of profitability. But let's go ahead and take a look. Sometimes there are times when you might want to just be shorting the market, and there is money to be made in that if you are not afraid to do shorting. So let's again just take a market order as a quick example here. We're going to be selling short. We'll go ahead and put in our take profit and stop loss again here. Note that this time things work a bit differently. Your take profit number is going to be a lower number because remember, you're betting against the market. You're betting that, hey, the price is going to go down. So let's put in 41,500 as our profit target. So that's where we want to see the market go. And if we get that target, we make money by betting against the market. Likewise, our stop loss is going to be a higher number. So let's just put 25% on there as an example. So if the price gets up to $45,642, our stop loss will be triggered and we're going to take a 25% loss on this trade. Whereas if we get down to 41,500, we make 22% on this trade. Go ahead and click on sell short, and our short order has been placed. You can see here also our liquidation price at $53,818, which is a higher price. So if the markets go up, we could get liquidated. Obviously, we have our stop loss in, so we're not going to get liquidated. We'll get out before that, but if we didn't have a stop loss in, we could get liquidated, which again would result in a complete loss of all the money you put into this trade. Putting in a stop loss allows you to get out before that happens. And again, if you want to close out this trade, either by limit or by market, and we'll click on market to close this trade. Okay, so that is how to do an inverse perpetual contract where you're using the actual asset that you're trading to fund the trade. In our example was Bitcoin. We're using Bitcoin to trade Bitcoin contracts. However, not all of the assets are supported in inverse perpetual contracts. In fact, very, very few are. You can see there's only 6 here. USDT perpetual contracts give you a lot more options on what you can be trading over here on the exchange. So let's go ahead and check that out. We'll go to the Sand USDT trading page. So again, very, very similar setup here. You're not going to find any big surprises over here, except that this time you are funding your trade using USDT. And of course, you have a much wider range of coins that you can be trading. You now have access to all of the hot altcoins that Bybit has listed. So again, you can adjust your margin from cross to isolated. We're going to do an isolated trade here with just a 5x margin. You can see the margin is actually much less. The leverage, is actually much less. Here for USDT contracts, you only have 25x for these altcoins. You don't have the 100x like you have on the Bitcoin inverse perpetual contracts. So let's put this down to 5x leverage. Go ahead and click on confirm to confirm that. And again, it works exactly the same here. We'll just do a real quick $100 example. So you see exactly how this works. We'll set up our take profit and stop loss. We'll do 50% and 50% for a stop loss and click on open long. There you go. So we now have a long position on Sandbox's Sand token, betting that the price is going to go higher. We have our take profit set up at $4.80 and our stop loss at $3.93, as you can see here. All the other mechanisms are the same. We have the funding rate, we have our mark price, we have our order book, all of that stuff, except now instead of trading Bitcoin, we're trading altcoins for US dollars. Go ahead and close that position out with a market sell. Okay, so that is how to trade derivatives over here on Bybit. But as I mentioned, Bybit's not all about derivatives. We've got a lot of other stuff going on here too. So let's go ahead and do some spot trading. So if you click on the trade tab, you'll see USDT markets, Bitcoin markets, and USDC markets. So this is coin versus dollars, coin versus Bitcoin. You get the idea. You see either here as well, we've got them broken down into categories. So for example, you can find just the DeFi coins, just the NFT coins, just the metaverse coins, just the GameFi coins, etc., etc. So there's lots of different stuff here. We're actually going to type in MV. This is a hot new GameFi coin that just got listed over here on Bybit. They did the Bybit launch pool, and they're also now trading here on Bybit. So this is the Genso Kishi game. We talked about this one on the channel maybe a month ago or something like that. It did like 100x for investors who bought this during the Bybit launch pool, showing that the Bybit launchpad is mega successful and is able to launch literal 100x projects on their platform. So that's really cool. But let's take a look here about how to buy and sell on the spot market. And it's basically the same kind of idea. We have 3 different types of orders that can be done: a limit order, a market order, a conditional order. We can again just go ahead and do a market order here for $100 worth of MV. Click on buy MV, and there you go. We'll just get $100 worth of that token at the best price right now on the market. You can also say, hey, look, I think this is going to come back down to $1. I don't want to pay $1.15 for it, so you just put in $1, and I want to buy 100 of those at $1. Click on buy MV, and if the price comes back down to $1, then my order will get filled. You can see it's currently open just down here. And of course, you can always click on past orders and trade history and all that stuff to see the different information there for you. And as well, if you want to sell, we can do that too. So I did just market buy some MV coins. So let's say, hey, look, I want to do a limit sell order for $2. I think this coin's going to go up to $2. We can see it got up to $1.60. That's not the end for it. It's going to go to $2. It's just a question of when. So we're going to sell all the coins that we just bought, and we're going to sell them for $2 when the price gets back up there at some point. So we're just sitting back and waiting. Click on sell MV, and off it goes. So we've got that order in as well. So we've got an order to buy more at $1 and to sell what we've already bought at $2. Pretty easy to do. You will notice there's none of that extra stuff here like we had in the derivatives account. There's no funding rate, so we don't have to be paying to keep our orders open. There is no liquidation price. If the price of this goes down 50%, well, we still hold our coins. We're not going to get liquidated on that position. So it's very, very different spot trading versus derivative trading, which has a lot more risk attached to it. So the spot market's here on Bybit. Pretty cool. They've got, again, lots of interesting altcoins that aren't listed anywhere else. And they get them here first because they do actually have the launch pad for those coins. So as you can see, trading the spot markets is way easier than trying to trade the derivatives products. The derivatives products are definitely a more complicated trading product that are for experienced traders. You have mark prices and liquidation prices and selling short and all this different stuff that adds a whole nother layer of complexity to your trading experience. If you want to keep it simple, just do spot trading over here on Bybit. They have big, vibrant spot trading markets with some really cool coins like Genso Kishi's MV token. So there's lots of great options there for you. But that's not all you have going on at Bybit. You also have the Earn feature. Let's take a quick look at this. Click on the overview here. So you can see they've got launch pools where you can basically stake and then harvest tokens for free, which is super awesome. They don't have one going on right now, but keep an eye out. They do frequently have really hot launch pools happening here, as well as lots of other mining and earning opportunities. Let's go ahead and click on flexible staking just to give you an idea of what you can do here. So we have trending coins like MV, which we just bought some of. So I'm going to show you how to stake that here in just a second. But also the top ranking coins, Bitcoin, Ethereum, USDT, USDC. And these rates aren't, totally crazy or anything. But if you're just sitting in a position waiting to make a trade and you're not doing anything else with your cash anyway, you can just stake it and then unstake it later and then be able to trade with it if you want. So you can earn while waiting. But let's go ahead and stake some MV tokens since we did buy some of these. So go ahead and click on stake now. And you see I have 0 MV balance currently because I don't have it in my BuyFi account. So remember, there's a spot account for trading the spot markets. There's a derivatives account for trading the derivatives market. And there's the BuyFi account for earning on your coins. So we need to transfer that over from my spot account to my BuyFi account. We'll just send all of these over. That's fine. Click on confirm, and they'll come through straight away into my account here. Now I can see I've got 213.77 MV tokens, and I will stake all of those. Estimated daily yield 0.07 MV. Click on stake now, and I'll start earning 13% APY on those tokens. Awesome, awesome. Super easy to start earning there. And there's other earning opportunities too, like dual asset mining, which allows you to get into these one-day pools here, as well as DeFi mining, which gives you some interesting opportunities, although they're mostly sold out, so you have to be fast to get in on those when they do become available. And the final thing I want to show you in this Bybit tutorial is how to buy an NFT on Bybit. In case you have been living in a cave or lost at sea or something, NFTs are kind of a big deal right now, and people have been going crazy for them. Many of the major exchanges have launched NFT marketplaces, including Bybit. So you can see here we can trade them either in Ethereum, US dollars, or the Bybit BIT token as well. That's also an opportunity there for you. Let's just take a look at these in Ethereum prices. So we can look here and grab one of these NFTs. Let's just Light Rabbit meets Shadow Cat. That sounds like a fun NFT. Let's buy that for 300 bucks. So you'll see I'll pay 0.1 Ethereum for that. I currently have Ethereum sitting in my spot account. I have 1.79 Ethereum sitting in my spot account right now. So this is paid for from the spot account, so not from the derivatives account, not from the BuyFi account. Got Ethereum sitting there, so let's go ahead and click on Pay Now and buy that. But I have now purchased an NFT. Awesome. That's pretty exciting. Let's look at our NFT. You can see your NFTs sitting here in your wallet. That's my NFT. Nice. I quite like that, actually. I think I'll keep that around. It's pretty cool looking little NFT there. So this is a pretty cool way to buy NFTs, especially, you get some trading profits and stuff that come through, and you can come here and browse the NFT marketplace and just buy some cool stuff because, hey, why the heck not? And that's it. That is how to use Bybit. In this tutorial, you've learned how to fund your account, how to trade derivatives markets, whether it be for Bitcoin, inverse perpetual contracts, altcoins, how to short the market as well, if that's something you want to try your hand at, how to buy hot altcoins, how to earn on those altcoins using the Bybit platform, and even how to buy an NFT. Are there more features that Bybit has? Yes, there are. We have not covered every tiny feature in detail here. There are other things that you'll explore around the exchange, but this gives you a pretty good overview of how to get started using the Bybit exchange. Thanks so much for watching this video, and peace out till next time.